Hello, everyone. Remind you of what the company has done, where it's going, so that those of you who've been closely watching Tesla understand, and so on. The important thing is that you get it. So, yeah, I think the way things are going is going to blow your mind. Why is Tesla's stock dropping so quickly? What important lessons can buyers learn from this sudden drop? Today's deep dive looks at the many reasons why Tesla's stock has dropped recently. We'll talk about both missed financial goals and big technology problems that have surprised the market. Stay tuned as we break down what experts have said, find out what these financial and technological problems could mean for the future of the electric car business. We will look into how these events affect the mood of investors and Tesla's market plan. To get the most accurate and up-to-date information on Tesla's finances and what it means for the tech and auto industries as a whole, make sure you hit the subscribe button and turn on alerts for Tesla stock news. The stock went up because people were looking forward to this robo-taxi or cybercab and then AI. But there isn't much new on AI, and the robo-taxi has been put on hold. At this 10 to 10 launch, it will have a steering wheel, but they still think they'll have something without one. You can then look at the core performance. It's still a car business. Their car margins were off by 200 basis points. Their EPS was off by 1 dime, and their deliveries are down 5% year over year. Yeah, it's just not a good story right now in the car business. So, things aren't coming together on the forward look, and the value is being readjusted as it should be. Craig Irwin, a senior research analyst at Roth Capital, is here to talk in depth about Nasdaq's recent financial success with a focus on Tesla. After reading Craig's in-depth analysis, it's important to understand why revenue and stock success are such important indicators of a company's health. A 7% drop in revenue is big for a business like Tesla that is known for taking risks with new ideas and quickly growing its market share. Investors should pay attention to this. When added together, this drop in sales and the 12% drop in stock value so far this year, it's a scary picture. These metrics are more than just numbers. They show things that are really going on in the business world, like when production might slow down, when it gets hard to grow the market, or when customer tastes change. Tesla has always set big growth goals and met them, but these signs show that the company is going in a very different direction from its normal path of growth and market dominance. This situation brings up important questions about Tesla's current business plans and its plans for the future. This could have a big effect on investors' faith in the company's stock price or production problems, giving us a more complete picture of the financial data. Yes, they have FSD 2.5 if you want to talk about it. If you try to reach the dream they talk about, the cameras on the cars don't have enough resolution. They need to make the cameras on the vehicles 10 times more detailed, and the powertrain will have to use about the same amount of electricity to run the system and the computer as it would to move the vehicle. You cut your range in half. That doesn't work for this level 4 or 4.5 thing they talk about. They probably are. They should be praised for being ahead of the curve with the features of the system they put in the car. Again, it comes down to how much risk you're willing to take, which is why I say it should be looked at in the same way. Or, clearly, things aren't going well for Tesla. So what problems do they have to deal with? Craig Irwin brought up important problems with Tesla's robo-taxi, namely the need for big changes in camera technology and worries about how much energy the system uses. These technological setbacks, which are key to Tesla's promise that fully autonomous vehicles will change the way people travel, not only affect how the company runs, but they also affect how investors feel. In the past, Elon Musk's big ideas have made people optimistic, which has helped Tesla's stock reach amazing heights. But when these promises aren't kept, like we're seeing now with the delays and technology problems, Tesla's stock goes through a lot of ups and downs. This pattern makes the risks of Tesla's method stand out. While it is innovative, it also brings about unknowns that can shake investor confidence and have a big effect on stock prices. Craig's ideas connect the specific technological problems to the money problems they cause, showing how important it is to find a balance between new ideas and investors' demands. It's not fair for them to trade above Toyota, but that gives them a pretty big extra multiple to do so. In 2018, Toyota will sell over 9 million cars. Tesla, on the other hand, will only sell 2 million, Markups are back to where they were in 2019. No changes have been made to the stock yet. A lot of people have high hopes for AI, Dojo, Optimus, and Autopilot. A lot of people remember Elon Musk's statement about the robo-taxi 5 years ago, but what he really meant was an update to the software of the car you already bought so you could send it out and have it make money for you. In other words, the company has made some really big claims and promises that they haven't kept. I don't think the stock will have a lot of push-up over the next year. During times of chaos, I've often said that you should buy Tesla. That's exactly what we did earlier this year. And I told you on your show in April that it was a good time to add to your shares. As of yesterday, the stock was up 74%. If you ignore today's 8 to 9% drop, I don't think you're buying this stock for EV growth. I think you're buying it for the other parts of the business. Our main focus has been on the M8B pack battery, utility-grade battery business, which made 100% more money last quarter than the same time last year. Elon Musk launched a factory in China that will triple production. It's the business that's growing the fastest and making the most money. This is what's been wrong. What's been wrong is not with demand, but with supply. So if you add that to the robo-taxi business and then fully self-driving cars, I think you're getting more of an AI company than a car company. Tesla has been a leader in the electric vehicle market, but its current production volume is much smaller than Toyota's. Toyota sells over 9 million cars every year, while Tesla expects to sell less than 2 million. Even though Tesla is ahead when it comes to new ideas, Toyota still has a big lead when it comes to size and market penetration. The market has high hopes for Tesla because it is a leader in electric cars and has big plans for technology. But the truth of production volumes and market capabilities, which we showed by comparing Tesla to Toyota, makes us think twice about how much we think Tesla is worth. Investors are looking more closely at whether Tesla's market cap, which is much higher than Toyota's despite the huge difference in production numbers, is fair. These market expectations, along with Tesla's current problems with technology and production, have a big impact on how investors feel as the company tries to grow and keep its big promises. Not only is there pressure to come up with new ideas, but also to meet the manufacturing power of big car companies like Toyota. Looking ahead, Tesla's future product launches, like the Cybertruck and the much-anticipated mini car, are very important. If these new models live up to what the market wants and solve the problem of production scaling, they could be a big part of stock rebound. However, another analyst says that Tesla's new plan to aggressively discount its cars in order to boost sales could be a double-edged sword. It might get a bigger share of the market, but it's also cutting into profits, which worries investors a lot. Even though Tesla's stock price and sales both dropped 12% this year, the company is still pushing the limits with new ideas like the robotaxi and self-driving technology. But these improvements also bring new problems, like the need for higher camera quality and better ways to control how much power is used. Looking ahead, the Cybertruck and minicar launches could turn things around for Tesla, but only if they can get past the production problems and meet customer standards. Do you think these new goods will be enough to get investors excited about Tesla again and make the stock go up? How will Tesla's plans to offer discounts affect its ability to make money in the long run? Leave your thoughts in the box below. If you found our analysis useful, don't forget to like this video and subscribe to Tesla Stock News for more news and in-depth talks about everything Tesla. Your support helps us give you the most correct and up-to-date information about how the world of electric vehicles is changing. Thanks for seeing it.